Hi, Niro Pillay here from Investment Rise. And in this video, I want to talk about the importance of understanding property investment cycles. You see, a common question I often get is, Niro, where do I buy? Where do I buy next? And if you've been watching any of my work, you know right now that a lot of my clients, I'm directing them towards Southeast Queensland because that's where the boom is happening. And I recorded a recent video about that. But the people often ask me is, well, why? I mean, Southeast Queensland has had a few years of flat growth. So what's now going to get it to start moving upwards? And that's really a great question. And in fact, it comes from understanding property investment cycles. You see, if you and I, we were sitting down having a conversation about where to invest, and it was 2011, we'd be looking at Sydney because there was a massive undersupply. Rates were low then as well, and they're even lower now. And so that's where you'd be looking to invest. But it's 2016 or 2017, depending on when you're watching this video. And so you need to look at today's evidence. You need to look at what's right today. Just because something has grown so much previously doesn't mean it's going to keep growing at the same rate. I mean, Sydney's had some astronomical growth over the last 4 years. We just can't sustain that. And if you look throughout history, how does the Sydney market perform? Well, we have 3-4 years of some astronomical growth, and then beep, several years of flatlining. The last boom was in between 2000 and 2004, just after our Olympic Games. We had some great growth, and then from 2004 to 2011, almost zero growth. Some areas even went slightly backwards. We had a slight blip up in 2009, but nothing substantial. So we need to understand how property investing cycles work. And Sydney's had some great growth, Melbourne's had some great growth, and they're at a level right now where price growth is unsustainable. Now, hear what I'm saying the price growth rate is unsustainable. I mean, if you look at this, depending which stats you're reading, prices have risen something like 65% in the last 4 years. You can't buy something today in an area that's grown 65% over the last 4 years, where prices are, depending on where you're looking at Sydney or Melbourne, either $800,000 or $1 million, and expect that same level of growth to continue. People just can't afford it. And when you look at a median price of Sydney being around about $1 million, Melbourne being around about $800,000, Southeast Queensland is still looking at about $500,000. Now that's a fairly large gap. But if you look at history, Southeast Queensland normally lags, say, Victoria by about $100,000 in terms of the difference between the median price point, and between Southeast Queensland and New South Wales or Sydney, about $200,000. So that's history, but right now the gap is much bigger. So even if the gap doesn't get up to where it was previously, it has to close. And right now, because of the property prices being so much lower in Southeast Queensland, because we've had so much growth, a lot of smart investors are taking their money and investing in good areas around Southeast Queensland. But a lot of people are also moving up there. They're taking their, say, $1.5 million home where they still have a mortgage of $500,000, selling it, taking $1 million, going up to Southeast Queensland, buying a home for cash and putting money in the bank. Now this has happened throughout history, it's happening again. And so once you understand the fact that the cycle is just repeating itself, sure, there are some things that are a little bit different as they always are, but in principle, it's repeating itself. That's where you want to be looking to invest. Add the fact that from an economic perspective, Deloitte said that the Queensland economy is going to be the strongest in the country for the next few years. There's a lot of jobs growth going up there. You've got major events like the Commonwealth Games going to cause massive infrastructure, already has brought in massive infrastructure. So you really want to understand property investing cycles, look at where a market has been flat for a while, has started to see some growth, add into that population movement, add into that infrastructure going in there, add into that the fact that other areas have already grown, like Sydney and Melbourne, they're at the top of their cycle, and now people are taking that money and going into Queensland. See, if you understand property investing cycle, really, Southeast Queensland should be the only place you should be investing in. Let me know what you thought about this video. It's a little bit different. It's about the philosophy behind investing, which is, I think, almost more important than just looking at what to buy. I'd love to know your thoughts. Let me know if you've got any questions. And as always, if you'd like some assistance with sourcing properties in good capital growth areas that perhaps cost you less than a cup of coffee a day, if not, in many cases, even put money into your pocket, then click the link below this video, leave us your contact details, and we'll be in touch. Look forward to hearing from you. Bye for now.